Maximus Analysis here for June 24th, 2016. And wow, what a day. The Britex, I keep saying Brexit, the Brexit, Jesus, actually happened. I didn't think it was going to happen yesterday. I thought it was going to be typically the same BS regarding Greece, pump and dump, but it ended up them being even dirtier than I thought because they pumped it all the way up yesterday and then they sold off like a madman. I mean, a lot of things we'll look at today. This will be probably not too much longer, but it'll definitely be a longer video. We see right now that they're testing this 2022 area. Look on the intraday time frame on the 15 for the ES. You can see that this was pretty much the opening range, and right now they're still breaking down below. So 203. Again, if you guys write down my levels on Twitter and just put them on your charts, you'll be surprised, dude. But the 2003 level, again, 2000 level, psychological level, they halted when it got to that point, and they just worked it all up, and now they're continuing down. So we'll see exactly where they go. Yeah, this is breaking a lot of support. So what I typically look at is to see how many weeks back they break. So let's look here and say this is from March. So from March down, they broke all these lows all the way back. This is not what I would consider a dip, to say the least, but we'll see what the follow-through looks like. Again, we have our trend line of bull versus bear, and that's around 1850. This line in the sand, again, a break of that and a close below that would definitely let us know, okay, they're approaching the 200-day moving average, and it pretty much lines up right with my trend line as well. But there's some serious stuff going on here, and that was some significant volume that was pushed down. Looking on the monthly time frame, again, I spoke about that yesterday, which also shows that you're currently, it was 2022, and this, as of yesterday, when we talked about it, it was 2040, and now it is 1999. Go look at that. So they need to hold. Let's see what the middle of this range would be on the monthly, right? So the middle of the range is here. From here down. Okay, so you basically got that 1975, 1976 area that we've talked about before, and that was actually the buy signal right around this February low. So do you see the buy signal? The high was 1968. You want them to hold at 1968 if you're a bull. Again, they're still out there, and we have to talk. So this is something that I will not do injustice to my channel or to anybody that actually takes the time out to look at my things. I will make sure I will try to give you both sides of the fence. I'll try to give you the top side to say, okay, we could potentially, if we broke up, we could go test 2135, 2160. If we break 2122, then we have to be very aware that what we're in. And right now, feels like a topping pattern, but again, you have to see what next week will bring. I don't know where they're going to go. I didn't know what they were going to do with Britain, so I had to give both sides of the table, both sides of the scenario, and I will always do that. Again, if I get stopped out of something, trust me, I'll let you know, because I trade. I really trade. I'm not a only people on traders on Twitter don't have any losses. I do, and there's no problem with that. I manage my risk, because if you do not manage your risk, you will end up not having any risk to manage. So let's continue to look at what is going on here. You have the NQ down 200 points, okay, right at the previous support levels, high volume. They could start with high volume or end with high volume. It looks like, again, I didn't know where they were going in regards to breaking down or up. I'm not going to say that I said this was some triple high. I said, shit, they got back in this. I'm not sure. They're back up in it. Let's see if they squeeze them back above here. Obviously, they did not, and they broke it right to this level, this previous resistance levels that we had. Got a false breakout, another false breakout, lower high. I didn't know if they were going to continue down or up. At this point, especially with some type of news like that, I'm not going to be the jerk that's going to say like, oh, I saw this coming. Didn't. Just prepare for it on both sides, and that's all I can do in regards to being a trader. You have the YM complete breakdown now. So now they're tested at 200-day moving average. They're back below this range. Are they going to spill like they did before? And this is daily. Are they going to spill down like they did before? This is a lot of volume. Last time we've seen volume like this, let's really squint our eyes. Okay, we saw volume like this on this. We saw it right around here. So let's actually see if we can use a visual. Let me see if I could get a visual right here. Okay, so that's the volume. Let's kind of squint our eyes and look and see when we've seen some volume like that. No, let's not use the weekly. That's not going to give us, the daily is probably going to give us a better look at things to see, okay, when did we have significant volume like that before? And now we're in 2013, 2012. I think it's just gauging it wrong. Yeah, so this is around 375. So we're just looking to see. They didn't have anything like that. And, you know, right now, the last time I seen big volume like that was September 2011. That was at the bottom. That was after it moved down. So now let's see what we got if we're going to get a significant type of crash movement with this type of volume here. I just wanted to go through it, and I hope that wasn't annoying, to just show you the significant amount of volume we had today versus in the past. And that we actually just went back 15 years. No, not 15 years, 2011. 5 years. So also we had looking at the CL. Again, this is the reason why I'm trading the weekly, so I'm still net short this. And if you guys don't understand, looking again, I have it on my newsletter. Again, I'll probably roll my stop to break even right now, see where it goes. And they need to hold these lows. These lows right here, 44, 44 and a quarter, 44.50. Let's just put something there so you guys can visualize it. This level is where it needs to be held. If you're going to get the pullback and spring to the upside, these are the levels I need to hold. Gold exploded today and it was all over the place with the 200-day moving average. And I did tell people, so again, I'm going to be honest, I told people not to initiate a long here in gold because I felt like it was at the, it's already 3-4 weeks up. And I didn't know what was going to happen, so I didn't want you to go initiate a, where you're going to put your stop down there. So again, I'll wait for the setup and let's see how this one plays out. Let's look at the pound, which is 6B pound F, and you can see that if we put this on the monthly for the pound, that I mean, this is going back to 2001. It's past these previous levels, so it's in a downtrend, and we got to see exactly where they continue or when they end this month, because that's a significant movement, to say the least. And this is stuff like this that you got to, again, manage your risk. So looking at some names, you had Amazon. Let's look on the weekly. Don't look at the monthly. Still holding these levels pretty well. Again, I have on the newsletter that I wouldn't go long here. I'd be looking at more at A, B, C. And if you guys want to know what I'm talking about, I will show you right now. So I was looking at this in regards to this. Let's say A, B, excuse me, 1, 2, 3, 4, 5 waves up. Then I was looking at potentially A, B, C correction to see exactly where we continue to go. So I don't like initiating a long on a breakout like this, because where are you going to put your stop? Google still flirting, well, back below this $700 level and closing below there, okay, with increasing volume. So this is the line in the sand. It needs to hold. It's under the psychological 700 level, so it needs to hold that level. All I see besides this is actually back here at 614. You had a huge move, I mean, a continuation down for Tesla. You can see that now it's coming and testing these areas with high volume. We'll see what the markets do if they give a little pop back up. But this, again, looks like it's going to test this 200-day moving average and potentially go down to like a 140. I mean, I'm using this as like my gauge to say, okay, it can get down to this range, breaking below it. And also using something to say, okay, below that, what else do we have? Not much. It was the last buy signal came, tested again, and below that, you got actually to the 114 level. So we'll continue to watch, and I'm going to put out the newsletter probably over the weekend. It could be probably Saturday or Sunday. Check your email when you get it. Reason being is I couldn't put anything out there because of how the markets are moving. Usually Fridays are a quiet day, but it was nothing about today was quiet. So I didn't want to make sure I give proper information out there to everybody and make sure that at least it's some type of weekly price pattern, or at least I get a close of a week so we can do our analysis and charts the right way. Going back to the ES, again, you can see that it's finally breaking below this opening range, and 2003 is the low where they halted it. And let's see if they're going to break that. If they break that, I'm looking at, I would say, probably 1985, 1975 area. And then that's when things can get a little hairier. So we'll see what happens when they open on Sunday night. Are they going to gap up or are they going to gap down? Take care. Manage risk. If you were wrong, and again, I've been wrong. Trust me, I actually showed you guys a LinkedIn trade that I didn't know the merger was going to happen. I got blown out of that position. If you are wrong, you manage your risk and don't hang around to see how wrong you're going to be. Okay? You will live to fight another day, and it is fine. I know great traders with proper risk reward, meaning that every one that they lose, let's say they lose $1,000, but every one they win $300. I'll scale it to a smaller thing. Every $100 they lose, they win $3. But they let their winners run and they cut their stops short. So they manage risk. Please do the same thing so that, not every red bar is a dip. So let's try to make sure we use some type of sense here to not say, oh, this is a bargain. It's a bar. Okay, cool. I don't want to buy bargains. I want to make sure that things are, I'm a trader here. I'm not doing Warren Buffett stuff. So make sure you're not turning also a trade into an investment because you don't want to admit that you're wrong. Don't let your ego get in the way. That's probably the biggest thing that has blown up many accounts that I know is ego trading. So again, it's a little bit longer video, but I want to make sure that, again, I don't know if this is going to end up being at 2090 next week, but if it's not, I wouldn't bank on it. I would say, okay, let's look and see where things are going to go and manage risk accordingly. So take care. Have a great weekend. I'll get that video, the newsletter out to you guys. If you want the newsletter, I've gotten a couple of people email me. Please email me at MaximusAnalysis.com. Excuse me, MaximusAnalysis@gmail.com, and I'll make sure to put you on the distribution list. Take care, and it looks like we're off to a hell of a month then. See ya.